And you're going to be more successful in trading or investing if you follow the trend. But what does that mean? And so I put together this presentation this morning to kind of define that a little bit further, right? Because I hear this all the time. And for new traders, new investors, like you could hear this a million times, but like, will someone actually like quantify what it means, right? So using like a roller coaster analogy throughout this time period, right? So everyone who's of a certain age has probably seen a roller coaster or has been on one, right? And so trends are very similar. And if you look at stocks, they kind of look like roller coasters. So when you're talking about a bullish trend, we're talking about stocks going up. If you hear bulls, bullish, right? And so that's the part of the roller coaster where the roller coaster is heading upward and maybe might dip down, but keeps heading up to like a higher peak, right? It's when the stock is climbing up. Why it happens? People are buying more and more because they think the stock will keep going up, right? So if it's a bullish trend, it shows that there's more confidence in this particular stock or company. And then how it looks, the stock price keeps making higher highs. So each peak is higher than the last, and it makes higher lows. So each dip doesn't fall as far as it did before, right? That's how you identify a bullish trend. So if we look at specific stocks right now, MasterCard is in a bullish trend, right? If you look at the highs, you have a high right here, and then you have a higher high right here, another high right there, another higher high, and then another higher high, right? So, and if you're looking at the lows, we have a low here, a higher low, another higher low right there, and then even more recently, we don't know how this is going to play out, but even this low coming down right there is higher than this low, right? So MasterCard is in a bullish trend, at least as it relates to on a daily time frame. Same thing looking at NVIDIA. NVIDIA, if you look at the trend, it is a bullish trend, at least in the short term on a daily chart, right? Because here you see this high right there, and then it looked like we made some lows, right? And then it looks like the trend switched around right there at this particular point, because here's your low, then you got a higher low, a higher low, a higher low, a higher low, and then more recently this is a low, but it's still higher than this last low, right? And then looking at the highs, you got a high here, a higher high, a higher high, a higher high, and another higher high, at least in this area right there. And so currently NVIDIA has a bullish trend, right? So then how do you identify a bearish trend? A bearish trend, just think a roller coaster coming down or a bear charging down a hill. What is it? The market or a stock is going downhill. Why it happens? People are selling because they think the stock will keep dropping. It shows fear or worry, right? And then how it looks, the stock price keeps making lower lows, which means each dip is lower than the last, and lower highs. So each bounce back in the stock doesn't go as high as the last one, right? So if you're looking at a stock right now that has a bearish trend, we're looking at Merck, right? A healthcare company. After this dip right here, actually probably starting from here, and you're going to see a lower high, 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 and then look at the lows, right? The lows, lower low, or you have a low right here, a lower low, a lower low. This one kind of dipped up a little bit, came up, but then you made another lower low, another lower low, and another lower low, right? So Merck is currently in a bearish trend. And same thing with GDX, right? The gold miners ETF. And I showed this one because this one was in a bullish trend, broke out of that range, but that's what we're talking about in terms of a sideways trend. The price bounces up and down, but it doesn't go higher than a certain point or lower than a certain point, right? So if we look at what's currently in a sideways trend, look at Microsoft, right? And I love Microsoft as a company, as a stock, but recently, look at this choppy price action. It's been going up, down, pretty much in the same range, right? It's not really making higher highs. Look at this high here. It's not making higher highs, but it's not making lower lows either, right? Because we have a high here that's higher than this high, but then this high isn't as high. And then you have a low that's higher, but then you have a low that's lower, right? So this is more sideways. It's not going anywhere. It's pretty much staying in a range from like 440 to 400, right? And that's been that way. I cut off the dates here, but it's been that way for a couple of months now. So I would say Microsoft is sideways, right? Same thing with Meta, another stock, and this is more of a recent sideways trend, but Meta has been pretty sideways as well, from like 542 up to like 600. It's not really making higher highs, right? You have a high here at the same point, a high here at the same point, and a high here approximately at the same point at $600. And then you have lows around, like I said, 540 to 550. But it's not really making lower lows. Right here you got one slightly, so it's kind of wait and see, but it's currently in a sideways trend. Even this is kind of holding if it holds above like this 540, 550 level, which is where it's at right now, right? So Meta is sideways. So how do you identify a trend? Number one, you want to look at the line on the stock. And what do I mean by that? Let's go to Think or Swim. All right, so what does the stock line look like? So if I were to just draw a line right here on Boeing, I got Boeing up, right? And just kind of through the middle. Let's see. Can you guys see my screen?
Yep.
All right. So if I just tried to draw a line through the price action, you see that that line is slanting downward. That is the trend of Boeing right now. It's in a downtrend, right? So that's the easy way. And you don't even necessarily need to draw this line on certain stocks that look like this. Like you could easily see that this is in a downtrend, right? So just look at the line of the stock. Conversely, if we look at, what's something else that's bullish right now? Wells Fargo. If I drew a line on the recent like kind of price action, what does that look like? Wells Fargo is in an uptrend. If I try to just draw a line through the middle of the recent price action, right? That's in an uptrend. That line is heading up and to the right, right? Simple, right? Those are ones where you can easily see what the trend is. But let's go back to Microsoft. We go to Microsoft recently, kind of just going through the middle. This is where all the price action is, right? It's flat, right? And of course, that's not a perfect line, but if you just kind of just eyeball it, looking at where the price is going, it's flat, right? So that's a sideways trend. So that's one easy way to just look at a stock and figure out what the price action is doing. Peaks, valleys, right? Peaks, valleys. Higher peaks, higher highs, higher highs, higher highs, higher lows, higher lows, higher lows, higher lows. XLF is bullish, right? And I'm just going through like, this is how I'm going to identify a stock. So ideally, you're not waiting for anyone online. You're not waiting for anyone on a podcast to tell you if something's bullish or not. Or a TV show on MSNBC. You should be able to look at a chart on a daily chart specifically. Here we got a 5-year day chart. And just go look at the last couple of months or the couple of weeks of price action, and then go see if a stock is bullish or not, right? So XLF is bullish. Let's go back. Wait. Hold on. Mamba, hush. Come here. Come. Lord. And then number 3, you could use trend lines. So in addition to just spotting the peaks and the valleys and looking specifically at the peaks and the valleys, if you want to get some more confidence, you could draw trend lines. And like me, I don't really use trend lines as much as I used to, candidly. But like if you're beginning and trying to figure out whether a stock is in a trend or not, and you're not sure, or sometimes the price action isn't as clean as it is on XLF, what you could do is just draw a line, go to Thinkorswim, make sure you're on this trend line tool right here, right? Take that, right? Click that, and then draw a line that mostly connects the lows. Right, go back. And I always right click to extend it to the right. And then draw a line that mostly connects all of the highs, right? Sorry about my dog. Right click. And so look at the trend, right? And so you're seeing that it's bouncing from here at the lows to here at the highs. And right, sometimes these are good lines to trade too. Sometimes, but like I don't trade this often because then usually I'm waiting really long for a trade. And right, I like more price action on a daily basis, like if we get a down candle on something that's trending. But these are usually good places to try and pick up a stock, right? Is at the bottom of its trend line. But here you can clearly see that it's trading through this channel from the highs and the lows, right? So drawing trend lines is another way to identify a trend on the stock. Right, so let's go back to the presentation. And lastly, like the cheat code, easy way to do this is moving averages, right? I always have moving averages on my chart. I keep the 21, the 34, the 50, and the 200. A lot of people also keep the 100 or a lot of others on their chart. It just depends on your trading style and what you're doing. But if we go back to that chart, right, even if I take these trend lines off, I have the green line right here is my 21 exponential moving average. This is my 34, this is my 50, and this is my 200. So looking at the trend lines, what you want to see is that they're going up and to the right. If they're going up and to the right, then you have a good trend, right? And in fact, the more parabolic this is, the better the trend is, right? So I think when we looked at Wells Fargo, right, look at how parabolic those are. This is a better trend currently than XLF, because XLF is a good trend, but Wells Fargo is a better trend. It's more parabolic, right? So you want that. And then number two, my second tip to figure out if your stock is in a bullish trend is, are the shorter period moving averages on top of the longer periods? So is the 21 on top of the 34, on top of the 50, on top of the 100, which would probably be somewhere in there, on top of the 200, right? Then your stock is in bullish territory. Versus if we go look at MRK, it's the exact opposite, right? The 200, the longer period average is flipped. It is on top. The 50 is below that. The 34 is below that. The 21 is below that, which means we have a bearish trend on that one. And then Microsoft, you'll see they're kind of flat and converging. That's how you know it's sideways. All the moving averages, right? So if I had to quantify this, it would be like sideways, neutral. So if you hear people say neutral, that means sideways. So I would say this is neutral to bullish. The reason why I would say neutral to bullish is because even though these are flat, the shorter period moving averages primarily are kind of on top. And actually, no, this is kind of weird because actually the 21 is below the 34, which is below the 50, but they're on top of the 200. So it's kind of mixed, which is why I would say it's sideways. It's neutral. Neutral to bullish because this longer period average, it's still on top. The shorter periods are still on top of that. They haven't crossed below this 200. So I would say neutral to bullish. Like I can't say that Microsoft looks anything like Boeing, right? Clearly Boeing is, it's negative, right? But let me see if gold or something is. Gold is kind of, I would say, neutral to bullish too, right? It's no longer or it's no longer bullish like it was after this down candle and these subsequent down candles. But it's still on top of the 200, so I wouldn't really say it's extremely bearish, right? Short term, it has a bearish short term trend, but I would say this is neutral to bullish as well. It's more sideways, but heading down. If we get below this 200 and these moving averages start crossing more, like this 21's getting ready to cross this 34, then it's going to start moving into the bearish territory, like GDX is more in the, I would say, bearish neutral to bearish camp rather than neutral to bullish, because it actually did cross over that 200, and you see the shorter period averages. Look at that 21 crossing the 34 and the 50, the 34 getting ready to cross the 50, and if that 50 crosses that 200, then it's going to be bearish, right? So just in terms of like trend analysis, this is like what people are talking about on MSNBC or some of these programs when they're describing stocks as neutral to bullish or bearish or neutral to bearish, right? This is how they're describing it. They're using moving averages, trend lines, looking at the peaks and valleys of a stock. Right here, this thing was bullish for a long time, and then it looks like here is when the trend started reversing, right? So just reading a trend, and this is what we call like technical analysis. Going back, the bonus tip, also be careful on your time frames, right? Those are the 4 tips that I have on like how to identify a trend, but also check your time frame. Sometimes, like depending on what you're trading, if you're day trading, you care more about the trend on a 5-minute chart or a 30-minute chart or an hour chart, or sometimes if you're scalping a minute or a 2-minute chart, you care more about the trends on those time frames, because the trend on a 5-minute chart could be bullish, but on a daily chart it could be bearish. So it depends on the time frame of how you're trading. So if I'm doing swing trades, which are usually open from anywhere from a couple of days to a few weeks, I'm mostly looking at the daily chart, because that is the time frame that I care about the trend on, right? If I am day trading, meaning I'm going to be in and out of a trade before the end of the day, then I'm mostly going to care about what the 5-minute or the 30-minute is doing, rather than looking at a longer or a longer time frame. Same thing with scalping. If you're scalping, you might only really care about that minute chart, that 2-minute chart, that 5-minute chart, and what the trend looks like on those charts, rather than what the 30-minute or the hour is doing. So we're also talking about trend on certain time frames as well. So like watch your time frame, and then if you're explaining this to someone or trying to explain yourself, time frames are very important. Like I might say, what is the trend on a weekly time frame, on a monthly time frame? Like if I'm investing long term and not trading, I care more about the weekly time frame and the monthly time frame or trend more so than I care about what it's doing on a daily basis if I'm investing, which means I intend to hold something for years, right? That's what I'm going to care about in terms of the trend versus like what it's doing on a day-to-day basis or an hourly basis, right? So now let's get to our weekly stock picks of this week for November 18th, starting Monday. With my disclaimer for everyone on YouTube and everyone on this Zoom, this presentation is for informational purposes only. Investing is risky. I am not a licensed financial professional. I am an attorney that just happens to do this on the side in my spare time. It is trading, especially, is risky. You can lose money. So do your own research and refer your trades and whatnot to any financial professionals that you might have, right? So looking at this week, I always show people, in order to find the trend, I look at KOIFIN. Sorry about that. I look at KOIFIN specifically, right? So looking at KOIFIN, I usually go a month out here. Oh, sorry. Right. KOIFIN, KOYFIN.com. It's a free tool, right? Also, you can look at SPDRS. their sector tractor as well. It doesn't look like this on a graph basis. It's like a bar chart, but it kind of does the same thing. I like this because you can kind of go look at more sectors than you can at people call it spiders, right? Than at the spiders. It's more consolidated, but you can go look at individual sectors and see how they're doing. So right now, what's hot? KRE, which is essentially the Russell 2000. A portion of it, a large portion of it, is the regional banks. Like KRE is up. So next week, looking for a pullback on KRE. Once again, I say this every week. I'm not telling you to go out and buy these things on Monday. What I'm saying is my strategy is to buy these things on pullbacks because they are trending, right? And that's why this whole first portion of this presentation was about identifying trends. And because that's how I trade. I trade with the trend on a pullback. So KRE and the Russell is hot right now. XLY, even though I had a bad trade on Tesla last week, XLY is still hot. The major components of XLY are Tesla, Amazon, Disney did really well after earnings last week, which is a component of XLY, and HD, but I don't know how I'll look at HD, Home Depot stock, but those are like the major components of XLY, with the two primary being Tesla and Amazon. Then you have XLF, your financial stocks, your big banks, your credit card companies, and some of your insurance companies. That's been doing well. And then XLC, which is your communication stocks, which are primarily Google, Meta are the top two. Netflix is in there. No, maybe I'm sorry. I said Disney was an XLY. It's actually an XLC. And then Disney. Disney did really well last week in XLC, not XLY. Forgive me for saying that earlier. So those are going to be the four places that I am going to be looking next week, right? You have energy that's kind of up. Metals and mining. I actually had an amazing trade on Alcoa last week. That was $1,000 trade. I'm in my last leg of that. That went really well. I'm up. I think I scaled out on my second portion of it at like 100%. First portion at 25%. And now I got my last leg left that's still up like 80%. So, but it kind of sideways now. So I'm really only focusing on these 3 or 4 sectors, the Russell and or KRE, which are pretty much the same, XLY, XLF, and XLC, right? So if we're talking about how do I build my watch list in between those particular sectors, like I do it in this particular way, right? So I already know where I'm looking now. So since I went to Koyfin or Spiders and figured out where I'm looking, now I'm trying to figure out, okay, what is strong in those sectors? So, you know what, let me go normal view. Let me look at the Russell futures, right? So if you look at the Russell is relatively strong. Let me move some of these, right? It had some dips and it's been dipping, but from a trend standpoint, higher highs, kind of a higher high, but a higher high, right? Higher, low, higher, low. So I don't care about a couple of down candles because the trend is still there, right? And so I'm really following the trend. So I'm just looking at the Russell before I go directly to the KRE. It's still in a bullish trend, even though it's had 4 bad days, right? And this is generally what I'm looking for, is exhaustion. So if on Monday this comes down to one of these moving averages, I might take the Russell again. But actually what seems to be stronger is the KRE, right? KRE, look at the moving averages. They're more parabolic than the Russell. It's a little bit stronger than the Russell, even though it's a major component. But this is really what I'm looking at for next week on a pullback. KRE looks strong in a strong sector. It's been bullish over the last 30 days. So if KRE significantly pulls back, that is on my hit list for next week. I think the next strongest sector, let me go back and look. What was the next strongest sector? XLY. So KRE is on my list. XLY itself, let me take out. I like XLY itself as an ETF. The issue with XLY sometimes is liquidity. So there's no liquidity, and November 22nd expiration. No liquidity in November 29th expiration. No liquidity in December 6th expiration. Because I trade options, and no liquidity December 13th. Let me try the 20th. There is some liquidity in the December 20th, but the options are kind of expensive. Maybe if it comes down, this would be close to like my price. I generally don't like to buy options greater than $5 because they're really expensive, and I can't really scale in and out of it based upon my budget. So I like XLY, but it's going to be hard finding liquidity, and then even trying to trade a spread on it. There's not a bunch of liquidity on the put side to do a put spread to the upside. So XLY is wait and see to see if there's any liquidity next week. Tesla, like I said, I had a terrible trade on this last week, but I really like it if it pulls back to 300. It's a nice round number. And there's this new indicator I've been using, volume profile. There's a bunch of volume at that 300 level. What did it do? There it is. Look at, so right here, I know, in fact, I wish I didn't have a 5-year chart. I'd rather, let me go to like a 20-day chart. Or let's say a month, all right. There's a ton of volume. So XLY is in trend, and look at this volume ledge right here, which means there's a lot of potential buying or selling for that matter that could happen right there. But because Tesla's kind of exhausted, and remember I was saying, I was looking over the last couple of weeks, Tesla's been in a range from 150 to $300 for a while. So it finally broke up out of that $300 price range, which tells me like I feel like this is going to be a new support level for it. Old resistance is typically new support. So if Tesla comes back to $300, that's at least on Monday anyway, because this is based upon like daily price movement ranges for me, then that's going to probably be a good place for an aggressive entry. I really want it if it drops down to like 290. That's where I'll size up if it gets there on Monday, right? So I've been kind of adding this to my trading strategy, is where has all the volume been, right? And conversely, like if this does pop up from here, where I'll probably try to sell some is going to be where this ledge is right here. And as you see where this ledge was, you start seeing a wick down where some selling came, right? So if I were to try to get out of this trade, at least start scaling out, I'd probably scale out around right here on my trade, right? So that would be like target 1 for me if I end up trading Tesla, all right? So I do like Tesla next week, but it's been very volatile. So I'd like I want a bigger dip on Tesla than let's say like an Amazon. Let me take that off my screen. All right. So looking at Amazon, same thing. Amazon is in XLY. It's in a strong sector. I like to be in a strong sector and a strong stock. So Amazon, actually, just looking at Friday, it looked like I could have got in on Friday. I might have missed this on Friday. That looked like this is a textbook move for me, right? A gap down, big red candle on something strong in a strong sector, gets down to a point of exhaustion and then pops right back up. You could potentially scale out of your trade already by there,
Hot?
Mm-hmm.
Hold on.
You know, back in the day, because the 80s, 90s, people used to have long hair.
Let me
No,
mute.
not me though. I had long beard.
What's it?
Francisco.
Okay, got it. So looking at Amazon, right? So this is actually like a good entry point for me. I'm actually pissed. I wasn't watching this on Friday, but this is a really good area. That would have been a really good area. I probably could have scaled out half by the time it caught back up to here, which is where it closed. But Amazon is on my list too. And XLY, another one is HD. HD doesn't look as strong. So I'd rather take Tesla. I'd rather take Amazon, which are stronger, and then XLY I would love, but there's not much liquidity. I didn't check the option chain for Tesla and Amazon because those typically have tons of liquidity. So I'm not worried about getting in and out of Tesla and Amazon with the spread or with just buying standard calls either, you know. Just because those two stocks are traded so much, there's always tons of liquidity. So we did that, and then XLF was, I think, the third strongest sector. All right, just let me go double check. Yep, XLF and XLC are our last two. So looking at XLF typically has some liquidity. A pullback on XLF. You see, I was already looking at this on Friday, but it didn't give me a big enough pullback to hit my levels, right? So I'll redraw those on Monday. I like XLF, and if you want to go look at what's inside XLF, all right, what's strong? JP Morgan is strong, so you could trade JP Morgan. Usually has a lot of liquidity. Bank of America is strong. Wells Fargo is strong, all right? Citi is strong. Visa is strong. MasterCard is strong. Visa is usually a little expensive on the option side, so it's MasterCard. I could be wrong on that. I know Visa is really expensive. Goldman Sachs, American Express, I found is pretty expensive too. Morgan Stanley. Once again, I love the financial sector this week because look at everything in it. You really could almost throw a dart at something in the top 10 of the XLF, and they're all going up. So this is prime candidates. Anything that pulls back in this sector that looks like XLF is going to be a prime candidate for next week. Any one of these, right? These all, and look how they look. They all look the same. Look at XLF, look at JP Morgan's chart, look at Bank of America's chart, and look at Wells Fargo chart. They all look identical, like they're moving together. Look, even the moving averages are slanting up exactly the same. I like Wells Fargo the most because it has the most parabolic slant. But even Citi, even Visa, they all look alike, right? And so they're all moving in the same fashion, like in conjunction. So that gives me more confidence, like on a pullback, that any one of these names are going to be good for me to take, right? So for me, I'm just looking at the liquidity and which one has the strongest trend in terms of hopping into. So that's why like Wells Fargo is probably top of my list. Even XLF itself is top of my list, but I like the entire sector here, right? And XLC is the last one that was strong. XLC generally doesn't have liquidity, just in my experience. Yep, look at that. Gotta go way in the money to find some liquidity. None. Yep, so can't trade XLC itself on the option side. You'd have to buy shares to trade that. But I don't like Google so much. Google looks sideways. Meta, we've already talked about, looks sideways. Google is sideways to bullish, so I'm not going to hate on it that much. But it didn't break that high. We talked about this last week. I said Google was going to come on my radar if it broke this high right here. Never did. Stay in that range. That's why I don't like it. Netflix looks the strongest, but it's expensive. Never pulled back last week. This was on my radar last week. Never pulled back. It's so expensive, though, I got to take it with spreads, but I can usually find some liquidity on the spreads in Netflix. But buying calls are going to be really expensive. T-Mobile, same thing. Love it, on my list. Never pulled back. Disney is now on my list because after earnings, it did, people love their earnings. I didn't think they were spectacular, but they finally showed that they're profitable on the streaming side. So Disney is now bullish in XLC. So this is on the list. So in my list in XLC, it's Disney, it's T-Mobile, it's Netflix. Why? Because they're making higher highs. Look at T-Mobile making higher highs. The trend is strong, so I still want that on a pullback. Disney, same thing, making higher highs. Trend is strong, want that on a pullback. And then this is a newer trend, which is what I like, which means the trade probably isn't overcrowded yet. So I really like Disney, really like Netflix making higher highs. What is AT&T doing? AT&T, not so much. I don't trade this at all. I don't trade Charter at all. So in XLC, I'm looking at Disney, T-Mobile, and probably Netflix in that order. So that's my watch list. So to sum it up, my watch list for this week is going to be KRE and probably just KRE, not the Russell itself, just looking at the Russell's chart. And then XLY is going to be Amazon, Tesla, and on pullbacks. And XLF, I like a lot of things in XLF. XLF itself usually has liquidity. I like Bank of America. I like JP Morgan. I like Wells Fargo. I like the Visa, MasterCard look pretty strong. But I really like probably Wells Fargo and XLF itself as the strongest in that sector. And then XLC, Disney, T-Mobile, Netflix. XLC, it looks good itself, but doesn't have any liquidity. And I trade options. So if you're trading stock, feel free to trade XLC too. And I think that is all I have for y'all today. Yep, that's it. Any questions? Anything you guys want to look at? A specific stock one way or another?
Thank you for the good presentation, though. A lot of information. Something what we use again.
Yeah. Anybody else want to look at anything? A specific name? All right.
Let's look at Costco.
Oh, okay. Well, candidly, I own Costco. So, and I told y'all where to get in, but and I pair this too with not Walmart, but like Walmart and Costco are like the top, two retailers where you still walk in and get something. So I like Costco, but also I would tell you to look at Walmart. Look at how strong Walmart is. I'm so pissed that I couldn't get this before earnings, but like it never pulled back, right? It never even came back to the 50, except I think right there. Like Walmart never really came back. So, but Costco still strong. If you look at 5 years, if you would have bought it 5 years ago, you would have bought it at 270. It's now at 900. So you would have like 3 extra money if you would have bought it 5 years ago. This is why this is in my long-term portfolio. Costco from a short-term trend is kind of neutral to bullish, right? If you look from my presentation today, it made a higher high here, right? It still hasn't hit this low, so I would still call it bullish, but look at how the moving averages are flattening out and they're kind of going sideways. So right now I would say it's kind of sideways. Ideally, with my long term, and I assume DeAndre, you're talking about long term, because I don't really trade Costco like that. I'm not swing trading Costco. Also, the sector that is in XLP isn't that strong right now. So if I were to try and grab this, it doesn't seem to dip much below its 50, but that would be more of an aggressive entry. And candidly, when I got into Costco, I think I got in at like 830 or something. I'm almost certain I got in right here. That makes a sense. Yeah, because it's around 830 and that's my price. I was looking at Costco and going, hey, we're in a presidential year, and so the stock market's likely to keep going up. And looking at history, Costco doesn't dip much below its 50. At least it hasn't for a year or two. So I wanted to grab it at its 50. That was an aggressive entry because I usually like to grab things at a 200 on my long term, but it worked out. So it's close to its 50 moving average right now. If it drops down to $895 or its old high around here. I haven't moved my fib levels. That should be higher now, but this was an old all-time high before it hit this number right there. So I would think that this is going to be another level of support for the stock, because look at where all of this price movement is pretty much revolving around that $895, $900 price, right? It's kind of straddling it. So if you want to be more aggressive, you can get into Costco at $900, $895. but a more conservative entry would be around 820. But will it ever get down here? I don't know. It hasn't in a while, you know. But that would be the best entry, would be around, you know, from 815 to 820 on Costco. Short term, if you want to start sizing in, or you can average in, and let's say if you wanted to buy 100 shares, say you had $90,000. Costco is really expensive. You want to, let's say 10. Let's say you got $9,000. You want to buy 10 shares of Costco, maybe buy 2 up here, or 3 here, and then 3 here, and then 3 here. If you want to potentially size in at a different position to get you like an average cost around here, like that would be one way to do it. So that way you're not putting all of your eggs in one basket at one price, right? You could scale in. But that's kind of where I like it. It's been dipping a little bit below its 50 a few times, so maybe you can get it at 880 or something like that. But Costco's been relatively strong and hasn't pulled back consistently, so you know, good luck trying to get that any further below its 50. And then even at like 900 and or like let's say $900. See, what's that discount? 900 divided by 960. 7% off. I usually like a bigger discount on the stock. So yeah, maybe this level where these lows are converging right there, 870, right? Around 870, if it dips that low, trying to get it at 870 where these 2 levels are here, where it bounced this last time. Or like I said, the best conservative level would be between 815 and 820 on Costco. Anything else? Oh, here's one other thing I was going to show you guys. If we look at Koifin, where is it? There it is. So also, for all of you people that like shorting stocks, right? I don't like shorting in a bull market, and we're still in a bull market, right? But if I were to short anything, I would be shorting all of these things down here. So GDX, healthcare. One of the reasons why healthcare is down because RFK Jr. was just appointed as the HHS secretary by soon-to-be President Donald Trump. And he's very anti-health industry, right? So healthcare has been tanking lately. So if I were to short anything, I'd be shorting gold miners, right? I'd be shorting healthcare. Semis, not so much. NVIDIA's been propping up semis, but the rest of the market hasn't been doing that great, right? XLB. And then XLP, right? That's Costco is in there, Walmart. That's why I'm saying from a swing standpoint, I'm not swinging anything in XLP because the trend is negative, right? Here are the things that have negative trends. So if I were on the other side and I were someone that liked to short things, these are the top 4 I'd be shorting, or 5. GDX, XLV, semis, XLB, and XLP. Those would be the sectors I'd be looking for short positions on, right? And then I'm looking for long positions on the things that are strong. So it's like pick on the weak and then ride the strong. All right. That's pretty much my strategy. And everything in the middle, I hold off on until it decides to trend up or down, right? All right. Any other things anyone wants to look at? Any particular name? Otherwise, we're going to end for today. All right. Hearing nothing. That's it.
I appreciate you, my guy. But besides that, maybe alarm.com. That's it.
What's the ticker for that?
I think it's ALRM.
Right now it's sideways, right? So we just go look at, like, this is a great example because I haven't really looked at this. And the price action is kind of weird. I would say it's sideways to bearish, right? Look at the high. So most recent high, lower high, even this last pop. So we draw a trend line. It's going down. We draw a trend line just through the middle of the price action. It's going down. It is popping back up, though. And then same thing. Look at the longer term moving average. The 200 is on top of the shorter term. But here we have a point where the trend may be reversing soon. But in order for the trend to reverse, it needs to get higher than this last high, right? So for me to say that this trend reverses, I would want to see alarm.com go above 72 bucks. And then I would say, okay, now we finally reversed the trend. Because here you finally see, okay, we have a low, then we have a higher low, right? And then we have a kind of a high, and then we have a higher high. But I need to see this get above this high before I say the trend is really reversed. This is why I would call this like neutral right now, because it is kind of, this was like a sideways trend right here. If we're just taking price action from this state, right? This is more of a sideways trend, and then it kind of consolidated and started coming up. But if you zoom out, before I would really get confident in this stock, at least to start trading or swing trading, I need to see it come above this high right here. So I would say it's like neutral to bearish long term. Like, and once again, this is why I'm saying time frame. On like a few months, you know, from a monthly standpoint, this is neutral to bearish, right? But more recent, shorter time frame, I would say it's neutral to bullish, because you had this recent pop. I assume if we had this gap up, it probably had earnings. I don't really, oh yeah, it did, because I don't follow the stock. It had earnings and probably beat its estimates. So you have this huge gap up. So it is in a short term, I would say more bullish, because you're seeing higher highs. But what I don't like is seeing that this longer period moving average is on top of the shorter periods. But you see this 21 crossing over the 34 and the 50, which tells me that the trend may be reversing. But once again, I need to see the price action get above like 72 bucks before I would be prepared to say that this is now in a bullish trend to start swing trading to the other side. For me.
Gotcha.
Yeah.
Got.
Feel me?
I feel you. Yeah. Good looking out.
Yeah. All right, that's it for this week. Mokama Sunday service, making it rain without the umbrellas. We are here every Sunday at 8 a.m. PST, going over topics specifically for beginning traders, investors, so we could just understand the market better, because I feel that too many people fear the market, and the reason is just because we just don't understand it. So that's it for this week. Y'all be safe out there. Sorry for my dog this time. She tripping. But other than that, I'll see y'all next week.
Appreciate you both.
All right.